to mobilize finance and human resources is also part of management and part of a skill, part of the skill that a manager should have. So all these skills, what does it help you to do? It helps you to understand how actions influence human behavior within, and how it has an impact on the external and the organization. Also, good managers must have endurance to, one second, to be able to understand and to, one moment, just give me a moment, guys. I have left my glasses. 1 second. So be on the call. I'll get my glasses back up. Yes, I'm good to go. So what do good managers need to have? They need to have high levels of patience, tolerance to endure any kind of challenges and changes that they will be facing in the future. So successfully manage an operation, that's important, that will require us to follow through a successful way of carrying on a business properly in terms of operations and then leading to execution. So each management action is predicated upon some specific decision, right? Good decision making is also crucial of being a successful manager. You can't be a successful manager if you don't have good decision making skills, if you don't have knowledge, if you don't have good operational skills, if you don't know how to manage your skills, manage your finances. Therefore, it is very important to have good management skills, especially when it comes to financials as well. Why is decision making important? Because everything depends on the right decisions you make, right? If you make the right decision at the right time, it will give you the right results, right? You need to be able to evaluate information. You need to be able to collate, get information, especially accounting, managerial accounting will give you sufficient details which will help you in making the right decisions. So these decisions can be categorized according to three interrelated business processes, such as these are planning, directing, and controlling. The central theme is this: business values results from good decisions. If you make bad decisions, you are not going to get good business results. Decisions must occur across the spectrum of planning. So planning has decisions, directing has decisions, controlling has controlling activities. It also has decisions. Quality decision making can only consistently occur by reliance on information. So you need to have good information to make sound decisions. If you don't have right information, can you make good decisions? Can you make good decisions if you don't have the correct information? If you are going to make decisions on your finances, can you make, yes, Lynn, you want to say something?
No, if you don't have the right information, correct information, you cannot make a right decision. Information is very important.
Yes. It could even not only bad decisions can even lead to bankruptcy at the end of the day, wrong decisions, right? So look at this as a table. I put it as a table so it's easy for you all to understand. Management decisions includes planning, directing, controlling, which is connected to your business values. Planning. What is planning? You plan to get your desired outcome. Planning must happen at all levels, not only at the senior level. Senior level plans it, passes it down, and then at all levels, you need to plan and execute. It's very important at each level. First, it happens at the highest level. It is the top level. Then it moves to the broad-based thought about how to establish an optimum position to maximize potential for realization of goals. So it goes to other divisions as well. Planning must consider financial realities. Now, can you make unrealistic financial decisions? When you, whatever planning you make, you need to make realistic decisions taking into account the financial constraints. Okay. So, and business organization may be made up of many individuals, right? So it's important that they share and understand organizational plans. So imagine the accounting or the management department does not share their plans with the marketing, and the production doesn't share the plans with the marketing. It's a disaster. It's a recipe for disaster. Therefore, you need to let everyone know what is happening. So everyone needs to be on the same page. So when you communicate well, everyone will understand. And if there are any problems, any loopholes, all that can be addressed as you read before it gets accelerated to another level. So communication is imperative. That means it's very important. So look at this planning. Planning strategy, you need to plan. Positioning, you need to plan. Budgets also you need to plan. So none of these will take place without proper planning. Therefore, you need to plan well ahead, plan well, plan clearly. Then we're looking at strategy. What is strategy? Strategy is it's a plan, no? Strategy is the way how you're going to achieve your goal, right? So you should invest considerable time and effort developing a strategy. If you have a good strategy, it's easy for you to understand what your goals and how you're going to reach those goals. So therefore, a clear strategy is a must. So why? Because all employees are involved in their day-to-day activities. They fail to see the need to take on strategic planning. So even in our day-to-day activities, you need to have strategic planning. If you don't have strategic planning, it's very difficult for you to reach your targets, right? Why? Because it's difficult to make a link between strategic endeavors and day-to-day cooperative activities associated with delivering goods and services to customers if you don't have a good strategic plan. So finally, a strategic plan will define the organization. Specific strategy setting can take many forms, right? So it could be with regards to core values, it could be regards to objectives, maybe the vision, and also the sustainability. All those factors can be considered. Now let's look at this. So planning strategy, you have to take core values, the mission, and sustainability also into account when it comes to the planning strategy. We have the core values. What are core values? So it's not only about an organization being there just to make a profit, right? They should not only be focused on profits, they have to be running the business with good values. Whatever the products that they produce, market, or manufacture, the business has to operate fairly, and business has to be an ethical business where you have core values and rules and regulations which are ethical. That's the broad spectrum of it. So you respect human dignity, you are aware about the environmental awareness, you know about employment rights, you know about customer service. So those things are key things that you need to look into when it comes to core values. So if organizational, let's say, members of your company does not understand this and they're only focusing on profits, then it's only going to be a profit-centric company. But that is very short-lived. So you will make profits for a short while, but in the long term, you will not be able to sustain in the market. You may not be able to, maybe because of your bad decisions. You might make bad decisions in terms of building a business value. So therefore, it could hamper the growth of the organization. And not having core values can also cause you self-destruction. Yatif Mao, do you like to answer this question? What do you understand by core values in a company?
In my view, the core values is actually like how a company like perceive themselves, and the core value is actually how a business company are like perceive themselves, and how in which manner they will finally achieve their goal. And the strategies should consider in developing strategy, we should a financial manager should consider the core values, because it is the identity of the organization. It is the like the core values are like, in my opinion, the core values are like includes the vision, the mission, and the motto, the company motto. So the in financial in managing the finance, we should also consider the core values in planning a strategy.
So core values is how you basically run your business ethically as well, right?
Yes.
If
yes.
You don't,
like.
Yeah.
Yes.
So
right.
If the company management doesn't behave ethically, it might lead to bad decisions, which might be dangerous for the company as well, right? So if you have
Yes.
your
like.
values, you will make the right decisions if your values are straight. You're aware of
Yes.
the employment
it has
rights.
Right. Yes. The core values has to also be with the ethics. I mean, it has to be ethical. Like an organization have to be ethical in developing a strategy. Yeah, like not harming other people. Like it should be like ethical, or also on staff. It should be like you should in developing a strategy. I mean, in like managing hours, the staff working hours, we should not overload them with more than their range of the working. They are like their workload more than.
Yes. Thank you.
Stress. Yeah, we should not stress staff out. Stress our staff out more than they can do. I think also bigger. Yeah. Thank you.
So now we're moving on to what is mission, right? So many companies, they have mission statements. Now look at Google's mission statement: to organize the world's information and make it universally accessible and useful. So they give like a snapshot of the organization and provides like a focal point against which to match ideas and actions. So the people who are working in the organization has a clear idea what their mission is, what the goal is. It's important for planning. This is important for a planning element because they define the purpose and direction of the organization. Okay, so strategic structure of a business is established or made by how well it defines its values and the purpose as well. So when it comes to sustainability, what do you understand by the sustainability? So look at during the World War II, people just made goods. They didn't care much about the depletion of resources. They just produced goods in a very fast paced rate. So most of them were unregulated businesses. They didn't take much care about depletion of materials. You know that raw materials are depleting when you keep some cannot be replaced as well, right? They didn't take much thought about that, so that led to a lot of issues. There's no sustainability, right? The little regard was given to products or resources that were depleting, and that took like a huge toll on the employees as well, because a lot were produced at a high pace. So when you're making a strategy which is sustainable, you have to look at the resource value, how well you are going to equip these resources, how well you are going to use these resources. Those are important factors. But today it has already changed. No? What do companies do today? The progress, right? They work towards their goals of economic profit along with a lot of care to the environment. They're responsible, they're socially responsible, they practice corporate social responsibility. So today it's a different story, right? So there are so many CSR reports. These reports can be very important, and they're taken in for discussions of how you can reduce in greenhouse gas emissions, water consumption, things like that. Right, so some companies, they practice these, and that gives a good image to the public. That also helps in your sustainability strategy as well, right? So some companies even comment on voluntary efforts, donations, work safety, and lots of things on that aspect. So when it comes to strategy, there's another option, there's another point that we need to focus is positioning. Positioning the organization to achieve the goals. Now you need to position the business in such a way in the eyes of the consumer and public so that you can gain profits, right? So in terms of cost, value, and volume and profit analysis, sustainability, in terms of global trade, in terms of branding, pricing, and sensitivity, you can position your brand and your company. Okay. Lynn, what do you understand by positioning strategy? From what I was explaining, what did you understand by positioning?
Sorry, I was thinking about the sustainability. I missed your explanation. Okay. Yeah, sorry for that.
Did you understand about sustainability?
Yes.
What did you understand about sustainability? What you were explaining?
Yes, sustainability is that to maintain a certain level or certain rate for a certain time. For I mean that we that is what I understand. Because if we achieve something, yeah, if we achieve something, and you have to maintain that your achievement in certain level.
Yes,
and also for a long term.
Yes. How to do that? By showing that you're environmentally, you're caring for the environment, you're caring for your employees. Now, in the past, it was not practiced. You know, they just kept producing things and manufacturing. The little care was given to the environment, and they didn't care about how natural resources were used for production, and there was no regrowth of those natural resources. That is also one problem. Okay, so today we practice more on sustainability. So positioning is also like that. Positioning is how your brand or your company is positioned in the minds of the consumers. So that could be done in terms of volume, profit, global trade, branding. So these are the 3 ways that you can position in the minds of the consumer. Okay. So moving on to budgets. So this is also in terms of your strategy, a very important part. How do you plan your budgets? Right? You have 2 types of budgets. One is operating budget right? The operating budget. What is the operating budget? A detailed projection of what a company expects its revenues, expenses will be over a period during a period of time. Companies usually formulate an operating budget near an end of the year to show expected activity during the following years, right? So it's very important when it comes to planning properly. You have to plan your budgets also properly. You need to outline the financial plans for an organization through these budgets. So under that first budget we are looking at is the operating budget. So I just explained what an operating budget is. Marjorie, what is an operating budget?
Hello, ma'am.
Hi.
Operating budget is like a plan on how you operate your budget.
Detailed
That's how I
projection.
understand.
It's a detailed projection. What the company is going to
Mhm.
expect the revenues and expenses over a period of time. Okay. Then we are looking at capital budget. What is a capital budget? Like you buy something like, let's say a machine or something like a long-term investment. It's like a capital, right? You're using that maybe for the efficient production process, right? So that's part of the company's capital, which is moving into operations. So planning the eventual returns on investment in machinery, real estate, new technology are some of the examples of capital budgeting. Then we are going to look at financing budgets. What are financial budgets? You have to look at your financing needs, which includes a good evaluation of the cash shortages. Estimates will help you, the companies, to meet with lenders, demonstrate why and when additional financial support may be required. So that comes under financial budgeting. So again, it's like a way of predicting an income and expense of the business on long term and short term, right? So budget process is also very important, though it's a very cumbersome event or activity or process. It is very, very crucial for organizations to follow this. So let's say planning budgets. It could be operating, capital, and finance. These are the three segments that we looked at. Then we have on directing. So you have your plans, then you need to direct the organization in terms of the execution as well. The actions you need to put into practice. Resources, they need to be ready. Authorization has to be put in place, which will help people to understand who is responsible for what in terms of the plan. What is the point if you have set up a good plan, but there is no direction? So clear direction is crucial. I see a lot of plans, good plans being implemented, but you don't give proper authorization. So managerial accountants, they have a big role in moving business plans into action. Don't have it as a plan. Make sure that you move it down, execute it, right? So they also should know the availability of inventory when needed. What is productive, who is the productive resources, is it people, machinery, what is required, schedule them appropriately when required, okay? You need to also be ready to demonstrate compliance with contracts and regulations. You have to comply with them as well. There could be complex tasks, but you need to make good decisions with strong information, and managerial accountants need to support this, the direction function in many ways. Otherwise, it's not going to be easy, because inventory is available when it's needed, right? So when it's required only, you need the inventory. So planning is important, management is important. You need the right resources. You might need the right machines available. So all that needs planning, and that's part of management. And management is always ready to demonstrate that. You have to be ready to deal with the compliance when it comes to regulations. Very, very important. So in terms of directing, these are the three segments that we were looking at: costing, production, and analysis. Going back to costing, now we didn't cover this. What is costing? If you're a good manager, you will know what are the costs and captured, and how do you assign it to goods and services. So cost accounting can also be defined as a way of collecting, assigning, and interpretation of costs. That's part of the cost accounting. But it's only a part of the managerial accounting applications, right? So remember that. So costing is also a strategy which you need to follow, and it's important in terms of management. Okay, is Dan here? I don't see Dan. Has he left the class? Dan, I was wondering where you were.
Yes, ma'am.
Dan, what do you understand by what I was just explaining about management, the importance of management when it comes to costing?
Yes, ma'am. Costing, we have to analyze the product, like for example, from the supplier. We have to study the cost price from the supplier, and the for example, in automobile section, we'll get the parts from third country. From this, we have to costing like tax, handling charges, and other like some country they are also charging the green tax. Including all this, then only after including all, then after that we have to get a margin, profit margin. From that, then we'll sell the product.
Yeah, so costing is actually, it's important for a manager, because in terms of management, it's very important, because a manager needs to understand how cost is captured and how it's assigned to services and goods that your company is managing. So under costing, you have methods like this job process activity costing. When it comes to another concept is absorption cost and direct cost. You don't need to know these in detail, but just know that they are in the management accounting techniques, right? Then when it comes to production strategy, production is how you develop or produce something. So there's a strategy involved for that as well. You need to have proper strategy for that as well, right? So it could involve dealing with tangible portions like fabrication, it could be assembly. There could be managerial accounting provides many support functions for managers to use in support of these logistics, like moving goods through production to a customer, right? Generally, production management is about running a lean business model, right? So managerial accounting provides numerous tools for the production and logistics as well, and also handling the funds, right? Payments for that. So cost has to be minimized and efficiently maximized while seeking to achieve enhanced output and quality standards. So advanced technology is used for this, and I mean, it greatly contributes to these processes as well. So let's look at some of the production strategies that you can use. For inventory, they can use a just-in-time economic order quantity, or you can use the responsibility method, service department, and quality. So those are few techniques where I put it in table, so it's easy for you to understand. Then moving on, analysis. Another important thing in management when it comes to decisions, you have recurrent themes, whether to outsource production or whether to have support function within the organization. So you analyze which one is the best, right? The managerial account will give you theoretical calculations and all of that, but you need to make the right decision. You have to have the information and do a proper analysis. So it's a case by case scenario, right? So these models doesn't work perfectly for every company. Like I said, you have to take a case by case approach for that. Then you have, yes, this is the table for that. So you have to analyze whether are you going to outsource, are you going to contribute, or are you going to look at special orders. Then in terms of control, right? Control is also a strategy which you need to master. What is control? You are going to look at alternative methods, strategies, and you may eliminate unfavorable situations. Okay? Isn't it? What is the recent trend is for enhanced internal controls and mandatory certifications by CEOs and CFOs as to the accuracy of financial reports. It's a mandatory control which is implemented recently. So you might have some procedures, control procedures, so that you can, like I said, how important it is to control management, finances, funds. Therefore, you put this strategy in place. Many organizations, as we know, they have a designated controller, sometimes known as a controller. Who is he? He's an important, respected person in a very large organization. Why? Because he's in charge of controlling many aspects. It's very complex, right? And they have hundreds of support personnel to assist them at each level, right? So understand this controlling position is a very complex situation, as well as they support. They give the necessary support. They have a lot of people working with them. Controller's job is actually the main responsibility is controlling tasks. You provide leadership, right? For all the managerial cost functions and managerial accounting functions. Everyone knows who a CFO is? Can someone tell me who is a CFO in a company? Anyone can raise their hands. Raise your hands and tell me what is a CFO? Yeah, Christina?
Hello, ma'am.
Yes, hello.
I think Chief Financial Officer in the company.
Yes, CFO is a Chief Financial Officer. What does he do? So he's the chief in terms of financial decisions. Yes, very good. Okay, Dan, or is it Dan?
Yes, madam. CFO is Chief Finance Officer, and he or she will be control the finance, like fund mobilizations, budgeting, planning, and all those things.
Very good. Thank you. Mao?
Yes. I think the Chief Financial Officer is like the CEO, but in a financial way. He controls. I guess he controls the finance, and he gives solution to the financial problems. which is the difference from the CEO is that the CEO is of like the overall officer, while the CFO is the
Yeah.
only the financial officer. Yeah, giving solutions to the financial problems.
Thank you.
Uh,
So
yeah.
he's known as a chief financial controller. Sometimes he's the controller in terms of finances, financing management. Yes, Romel?
I just want to add to what they have said. From the word chief, I think he's the primary responsible for all what we have talking about. Example in planning or record keeping and the reporting of the
Exactly.
that's it. Thank you.
And sometimes he has dual roles, like he can be the control as well. So auditors and all, they report directly to him sometimes with all the information, because he can make like a lot of important decisions. Therefore, he needs good information. So what does like a controller do? They monitor certification and also they use scorecard. We're going to look at all of this. Why? What is monitor under this? So managers should have systematic ways of monitoring or have an awareness of where the business is heading. That is why you need to monitor. Managerial accounting provides that information, those tools to give like a good understanding about business operations and where it's heading. And if you need any adjustments, that can be done. Under that, we have standard cost. It's like a benchmark against what is actually produced and what is like what you have actually produced and projected. Standards you need to it can be developed for things like labor cost, efficiency, materials, and material cost and utilization, and more general assessments as well. Overall deployment of facilities as well. So the standard cost also needs to be accurately monitored at this level. Then what is a variance? It's a difference, right? That's a deviation of what? So when you look at financial and operational results in any business and organization, if there's a difference, we call them a variance. The aim is you need to identify what are those variances are and why it has happened. And you can take corrective actions as well for that, right? So accountants will assist managers to focus on expectations by giving them results of variance analysis. We call that management by expectation. What is management by expectation? You are looking at financial and operational results of any business organization. The main idea of it, or the aim of it, is to point out significant differences between budgeted and expected amounts. So it happens when the company controller alerts the management about expenses that are beyond their desired amounts. So variance means like a difference. You know, if you're a good manager, you will understand, you will have a good eye on it, a sharp eye to catch any significant deviations. And then you can take corrective actions when those differences happen. The other point is flexible tools, right? In terms of monitoring these differences, you need to have flexible tools. Now, for example, business will have a large increase in customer demand. So to meet the demand, what does the manager do? He will authorize significant overtime. Now, when you have higher overtime, you need to pay higher wages and for the extra hours. Then as working, extra hours will result in higher pays because of overtime. That could be an unvariable variances. However, the added cost was incurred because of higher customer demand, because customers wanted it, right? So that was, maybe that was a good decision, because you have, in the long run, you have satisfied your customers. If you didn't provide them, your customers will be dissatisfied. So in the long run, it's a good decision. So it may be not so good to interpret it as a variance in a negative light in an instance like this, right? So be flexible, understand the issue, and make your decisions. So when it comes to analysis, you have outsourcing, contribution margin, and special orders, which we were looking at before. Now let's look at what is a scorecard. Call it a balanced scorecard. What is that? It's like a strategic planning and management system. We call that a balanced scorecard. So organizations have what we call balanced scorecards to communicate what they are trying to accomplish. You will align day-to-day business or day-to-day work with everyone who is doing whatever that is doing with the strategy, prioritizing projects, products, and services. That's also known as the scorecard method, right? So why companies are also realizing these measures alone is not enough. So they need one thing, they need to measure reports and what has occurred, and may not provide timely data to respond aggressively to these changing conditions. You need to give data to change, to accommodate these dynamic changes. Okay. So you might, let's say, you might want to have lower level personnel. It may be too far, removing organizations' financial outcomes to care. Sometimes that could be an issue. So as a result, many companies have developed more involved scoring systems. These scorecards are custom tailored to each position, what I was explaining before, and draw focuses on evaluating elements that are important to the organization. Evaluate what's important to the organization and control, under the control of the employee holding that position. Look at this example. Fast food restaurant would want to evaluate response time, cleanliness, waste, similar elements for the frontline employees. These are the elements for which the employee would be responsible. Presumably, success on these points translate eventual profitability, because if you give them all these points, it will come up as a profitability aspect for the business. Okay. Okay, what do you understand by the scorecard method? Donna, did you listen? Shanal, were you listening? Vivi, Riza, Romel, Walter, Rhoda, Rinchen. Mavik, what do you all understand? David, what do you understand by the scorecard method? Anyone who likes to answer? Dan, what did you understand by scorecard method? Did you understand that? This one, Dan?
Yes, ma'am.
Sashikala,
The scorecard is to measure the strategy of the financial.
Yeah. How do you do that? Why is companies finding it important to do this?
In order to overcome the bankrupt, I think.
In order to be more efficient in terms of your operations also.
Yes, ma'am.
because some of these information are not timely data. And it might be too late when you get the data to make real-time changes into your process or to the business organization. So that's why they look at certain business units. So that's why we talked about involved scoring systems. So you look at only segments. So each segment, how well they do, will have an overall impact in your customer satisfaction, converting into more profits. Understand?
Yes, ma'am.
Yes, Irene. It's a way to measure achievement or progress towards a particular goal. Scorecard. Very good. Thank you, Dan. Thank you for answering. Right. Now, we have 3 case studies. For each of these elements discussed, planning, controlling, organizing, directing, decision making, think of at least one business activity. How does each of these activities have an impact in these organizations? So 3 different case studies. Any volunteers to read the case study? Raise your hand and I'll give you the chance to read. Romel, yes, you can start reading the first case study. Read it out loud.
Okay. Isn't financial management only helpful to those who interact regularly with investors and financial markets? Through the effect of their actions and decisions, all business managers interact either directly or indirectly with investors and financial markets. Following the norms of standard business governance structure, those who put up the capital for a business, the investors, own that business. As a privilege of ownership, investors have ultimate say on all the business policy, including the appointment of business management. Investors are clearly critical stakeholders for any business. In truth, managers that fail to please their investors, regardless of how well they please other stakeholders, will at some point be removed. Because of this reality, it is essential that all business managers, regardless of their functional focus, have an abiding appreciation for what matters to business investors. Financial management provides that investor perspective and shows the role of value-mindedness. But the principles of value creation matter to managers for reasons other than just because they are required to please investors. The principles of value creation are fundamental to any manager interested in prudent decision-making. Strong cash flow is vital to the health of any business. Financial management helps managers measure and maintain that lifeblood. For example, managers of not-for-profit institutions, enterprises that do not have profit-oriented investors, are still motivated to follow standard financial management principles if they are interested in not squandering enterprise capital and maintaining enterprise cash flow. Financial management helps managers understand the sources of value in their business and how to trade off inherent business risk.
Good. Dan, you can read the next one, but before we go on to the next one, let's discuss the points of this case study. What are the key things that you noted in this case study? I'll give you 2 seconds, just read over and tell me, and look at the things that we talked about in terms of organizing and directing decision making. Think of one business activity that we have discussed which is relevant to this case. Okay, Lynn? Okay, Sashi, Romel, Noor, Shana, Christina, Donna, Riza, Walter, Marjorie, Rinchen, Aubrey, Lydia. Lydia extremely quiet today. Marvik, David. All right, are you all here? Yeah. So just give me 1 point on one business activity on what we have discussed so far. Romel, not only reading the case study loud, you have to answer questions also. One second. Okay, now tell me. Right. What are the key points here when it comes to decision making? Who makes decisions here? Lynn? Lynn, did you understand? You're still reading. Dan?
Yes, madam.
What do you think about this case study? What are the points?
Points
So is it only
is
financially management only helpful to those who interact regularly with investors and financial markets, or all the facts that we were discussed? Is this true?
yes, ma'am.
Financial management is only helpful for those who interact regularly with investors and financial markets. Is it true, Lynn?
Yes, madam.
Lynn, what are your thoughts? Why do you say it's true, Dan?
Yes, ma'am.
Why do you say it's true? Justify your answer.
Because all the cases are like investor and business. They're all related regarding the financial management.
Yes, but are they only the investors and financial markets? Financial management is only helpful to those. What about the marketing department, operations? All of that is interlinked, no?
Yes, madam. Interlinked.
So
They are all.
yes, it's all for everybody. Lynn, did you understand that? Why, Lynn?
Hello, hello.
Did you understand that? So do you think it's only the people who are dealing with investors and financial markets should only be concerned about the finance side? Or we discussed it so many parts now in our lecture based on.
Yeah, I think it's not only the financial parts, also we have to consider what kind of the business they are doing.
Mm-hmm.
And then if I were the investor, I want to make an investment, I have to check to see their reputation,
Mm-hmm.
their practice, their principle, and then what are their kind of the management, including financial management.
Yes.
Yeah, because I think reputation also very important for the modern days. So we have to invest the right, right the place. I mean that right company or the right the factory or the manufacturing factory or something. This should be right place with
Yes.
to work with the right people to produce right product.
Exactly.
It's
Good.
important, I think.
Thank you, Lane.
Yes. Thank you.
Okay, Dan, you want to read the next case study?
Yes, madam. Case study 2, no, madam?
Yeah, 2.
Yes, ma'am. Isn't the financial management mostly a number crunching exercise? If you do the right calculation, you get the right answer. A striking characteristics of real-world business decision is that they tend not to be straightforward, black and white decision. Because of complex nature of such business decision, the more accurate goal of financial management is not to give the right answer, but rather helps the manager build business judgment. They need to approach highly notched decision. Financial management decision tend to be more like a professional basketball coach deciding whether to acquire a particular player for the team than a statistician calculating that player's correct field goal percentage. Financial management gives managers the tools that add rigor to their judgment. It helps managers identify the source and magnitude of concern and opportunity for the business. It helps managers appreciate the business risks they face. It helps managers understand the perspective and the needs of business investor. In truth, because of the ambiguity embedded in the real world, the business problems, there are lots of right answers as well as lots of wrong answers. The financial management helps manager distinguish between the two.
So the question is, isn't financial management mostly a number crunching exercise? To do the right calculation, you get the right answer. Based on what we have discussed, I want Romel. Walter, can you answer this question? Riza, your internet is not good, so you can't respond, you said, no? Walter, you like to take a go on this based on what we discussed? Go over the case study. I'll give you a few minutes. Marjorie, Rhoda, Marjorie, are you there? Saraswati, are you there? Walter, can you answer this question? Lydia, can you answer this question? Come on, guys. Walter? What do you think about this question based on what we have discussed?
Yeah, hello, ma'am.
Yes, hello.
Yeah, I think the financial management must give the correct information of the financial flow of the company, so that it helps it to grow.
Yes, very good. Donna, yeah, Mao, Dan, good. Or Sashikala, you want to answer, Sashi? Yeah, Mao, you like to answer?
I try to answer, ma'am.
Yeah, Rhoda, you can answer.
Yes, I guess, but I'm not really sure.
That's okay. But we can't hear you. Can you speak a little louder?
Hello?
Yes.
Hello?
We can hear you.
Can you hear me, ma'am?
Yes, now I can hear you.
Isn't financial management mostly a number crunching exercise? Yes, for me, it's yes, ma'am. If you do the right calculation, you get the right answer. Yes, of course, because it is just there for my own understanding. They said that in real world business problems, there are lots of right answers as well as multiple answers. So if they will not calculate the right calculation, of course, they will not get the right answer. So it's in financial management. They distinguish between the answers from right or wrong.
Okay. You were breaking up. I couldn't hear you properly. However, thank you for taking your time to answer. Anyone else? Dan? Yes, correct, Lydia. Financial management should give the correct information to run or make proper decisions when it comes to business organizations. Walter, do you like to read the last case study? Good, Audrey, I like your answer. Should be accountable and have transparency when it comes to financial status. Very good. Walter, can you read the third case study? Are business managers only fooling themselves when they use financial forecasts to make business decisions? Nobody knows the future. Let's read this.
Okay, case study 3. Although financial analysts spend a lot of time working on financial forecasts, they appreciate that their forecasts are undoubtedly wrong. The world is too uncertain to forecast the details of the future with any precision. Despite the inevitable failure of this specific detail of financial forecast, business managers use financial forecasts to gain important insights into understanding the key bets in any business decision. As managers use financial forecasts, they understand the interrelationships and drivers of their business economics. In their manner, they better establish probable ranges for forecast outcomes and can use their understanding to improve their understanding of business linkages. The process of disciplined forecast is highly valuable to business managers who constantly make important decisions in a highly uncertain environment.
Yes. What are your thoughts about that? Is it just making a fool of themselves when they use financial forecasts? 1 second, let me check from my second device. I can't see. Okay. What are your thoughts about that? Anyone can answer. Dan, Rhoda, Lydia.
Yeah. Hello, ma'am.
Yes.
Yeah, I think when managers do the business financial forecast, they are not fooling themselves because it helps them to have at least a rough draft picture of how their business planning or their financial growth might be in future in terms of their sales and the way they run their business.
Yeah, very good. Yeah, Mao?
Yes, teacher. Like when making the financial focus, the managers aren't fooling themselves because the forecasting is just the prediction and it does